Hello everyone, happy Sunday. This is Simon with AvaTrade. Welcome to our weekly webinar. Special welcome to the new people. And for you, just 2 words about the idea of the webinar, and it's pretty much reflected in the title, Your Weekly Trading Plan. And what we're trying to do here is actually to get our trading more organized by having a plan. So what we do here, we're going through some fundamental technicals, looking a little bit at economic calendar and trying to really make a plan, a trading plan. As I always say, as traders like to say, you plan your trade and then you trade your plan. And in everything, and especially in trading, when you try to be organized and less spontaneous, you have a chance to have better results. So that's what we're trying to do here. A few things about myself. This is me, Simon Friedman. I'm a senior account manager with AvaTrade. My overall experience, this June will be 23 years since I started to trade. Back in New York, I was licensed proprietary trader. I did active day trading in a couple of Wall Street firms for about 11 years, and then I moved into less stressful trading that doesn't involve intense day trading. And I also started to mentor and educate other traders. And currently, I'm very happy and privileged that I have the opportunity to work with customers and assist them at AvaTrade. The agenda of the webinar is pretty much the same thing. Every week we go through indices, stocks, commodities, and Forex. And before we move any further, of course, this is important, the risk warning. You can find a full document at avatrade.com. And everything we do here is purely educational. Now, these are the channels that I highly recommend that you subscribe to and follow up. We have Telegram, Twitter, and as I always say, my favorite YouTube channel. You have a lot of varieties there. You have tutorials, you have a lot of educational videos, you have webinars, including this one that you can watch. And of course, if you missed the live webinar, it's being recorded and posted on YouTube. You can just subscribe and click on the bell, and you will be notified when the new things are being posted on YouTube. Okay, as you know, I like to take these screenshots. This is from the article. You can find the article on marketwatch.com. And it caught my attention. And there were a lot of talks and, following a lot of Russian news or news involved Russia because of the war between Russia and Ukraine. And there are a lot of talks about the threatening that the dollar is going to collapse and other things are happening. China is doing trade with Russia, and they insist that Russians are paying in the Chinese currency, and other things are happening. So it looks like the economists or people involved are raising the question, and it says right here, a de-dollarization mania is gripping Washington and Wall Street. Interesting article. You can look into it, what they think, what they say. So it kind of explains why dollar recently really sold, and even though the Feds are still raising, the dollar is remaining kind of weak since the recent fall from the highs. So we'll be taking a look at it technically when we get to the charts. Economic calendar, very important aspect. I just want to bring it up for new people that are not familiar with that. Some people ask me, is it important to see and know economic calendar? And I always say it's very important. And at the same time, I always bring the following. I say, even if you knew ahead of time what numbers are going to be posted, you wouldn't really know how the market will be reacting to it. Because today we live in the time with the global economy and everything else, and sometimes things are upside down. That's what we saw, I think, at least since 2008, I would say even earlier, where the bad economic news would translate into good things for Wall Street, because as long as we were getting bad news, the stocks will rally, the indices went higher and so on. And then when the Fed's starting their tightening policy, there was a threat for the markets and so on. So why is it important? Important in a simple way, the way I look at it from a very practical perspective, that I don't want to be caught by surprise in a certain trade that I have, and that's the way the traders are looking. Some try to avoid trading during the announcements. Others, on the opposite side, they actually waiting for that volatility of the announcements, and they trade the volatility for the first 15, 30 minutes up to an hour. So it depends on your style, it depends on your goals, it depends on the level of your risk and so on. But knowing this, it's very simple. You know that certain things will be happening. So you prepare yourself and you either act or stay away from acting until things settle. Now, another thing that important to mention that I take over here only the high impact events. You can filter them. You can find the economic calendar on our website or on our app, AvaGo, AvaTrade Go, or any third party. It's the same source. It's being reported. It's a public information, so you can find either way, and you can also modify it. You can choose and filter whatever it's relevant for your trading and so on. Okay, so this is the high impact events, and let's go through them really quickly. We have on Wednesday CPI numbers from Australia. We have durable goods from US. Thursday GDP numbers from US, important. Friday, to be focused on Japan. Like I said, if you take a full data with the mid and low impact, you're going to see much more announcements. So we have here on Friday interest rate decision, and I think this is the first interest rate decision since the new governor of Bank of Japan took the position. So it's going to be very interesting to see, even though he reassured everyone that he's going to be acting and following the same policy as Corona did. But previous to his speech, a lot of people were actually looking at him as someone more aggressive. So we could see surprises. Anything is possible. GDP numbers from Germany. We have chairman of Swiss Bank speaking, Swiss National Bank, excuse me, it is. And we have GDP numbers from European Union and CPI number from Germany. So this is the economic calendar. And again, you can customize it. You can see what works for you or what's important for you. Okay, now we're going to switch to the MT4. I hope everybody sees it. Now, before we go into specific instruments, as usual, I try to bring kind of a general idea or the big picture of what's been happening. And in general, markets are kind of, it's hard for them to decide which way to go. And I by preparing for this webinar, I read a few articles. And interestingly enough, some analysts are saying that the market's kind of tired of volatility, and they're kind of taking a break before another wave of volatility comes, and they connect it with 2024 elections in US. So just to give you ideas, all the indices didn't do much the week they just ended. All of them pretty much were up on Friday about 0.1%, and all three of them were down on the week about 0.5%. So it's kind of a general mood, nothing much happening. And then when we go through the indices, you will see, and if you try to remember what I said last week, that all the indices were facing, talking about US indices, were facing a clear resistance, and they tried, but they couldn't really go higher. At the same time, they didn't really fall. Another thing to keep in mind, we are in the middle of the earnings season. We had some mixed reports. We had some bad reports, and that includes Tesla. and AT&T. We'll take a look at the stocks at the moment. And another thing, I wanted to bring something that I also researched. It comes from Barron's. The researchers did the survey with professional investors, and they did it in the past month. And the numbers are the following. It's kind of interesting, and it just explains what the markets are kind of in a sleeping mode in a way, and why volatility is really reduced. So 36%, and I'm quoting what they're saying, 36% of professional investors we surveyed in the past month describe themselves as bullish on the outlook for stocks over the next 12 months. The same percentage say they are neutral, and that's 36%, right? While the remaining respondents, 28%, put themselves in the bearish camp. And I continue quoting what they say. Bullish managers see the S&P 500 gaining 1% through the rest of this year and 8% through June 30th, 2024 to reach the level of 4,450. So that's for bullish. They predicted by June, the end of June of next year, S&P will be at 4,450. And the bearish expect the index to fall 13% from its current level through the year's end, and to lose 8% through the middle of the next year, sinking to 3801. So we have two scenarios. The bullish are predicting that by the end of June, S&Ps will be at 4,450, and bearish are predicting the S&P will be at 3,801. Precise numbers. Okay, so I figured I'd share these things with you, and it makes sense. So we're going to take a look in a moment at the charts. And again, you have 36% professional investors say we're going higher. Another 36%, they say they're neutral, pretty much flat. And the 28% are towards the bearish mood for the market. Okay. So let's go through the indices, and I just want to start with China. And if you remember, I mentioned to you that the Chinese index I mentioned to you last week has a hard time going higher. And take a look what happened. I mentioned last week that we're playing with the 200 moving average. We broke above it. We broke through our resistance level, 13,300, and the last 3 days we just dived back below it, both below the channel and below the 200 moving average. And as I always do, even though it's not in order, but I want to bring few assets that really connect to Chinese index. And this is crude oil. As you could see, it had also a nice fall, and the copper also sold together with Chinese index. And on the forex side, we have two currencies that are called commodity currencies, the Australian and New Zealand dollar. As you know, that China is buying a lot of goods from both Australia and New Zealand. Therefore, these two currencies are called commodity currencies. And take a look at Australian dollar. It sold on Friday, and New Zealand dollar also sold and is sitting on 200 moving average. So we'll get to the Forex later. I just wanted to mention that. Now let's go to US indices. As I said, we'll start with the S&P 500. If you remember last week, I said at this level that we set up the horizontal line will be a hard level to break. We couldn't break it, right? As you could see, we had the fight, and the last 3 days went lower. Friday was, as I mentioned, a little bit of a positive day, but for the week, we were down on S&Ps, and the level of 4173, 4174, that level still remains the level of resistance. NASDAQ, similar story. We tried this week to reach to that recent high that we had at 13,310. We couldn't succeed, and then we sold. And as you see in the weekly chart, as a red candle for the week. And Dow Jones, similar story. On the daily chart this week, we tried that level again, and in this case, it's 34,215 level that we were fighting in the past. We still couldn't break that level. So something to pay attention to, and based on fundamentals that I share with you, it makes sense. The market's totally undecisive. And then we have the earnings season. Again, I want to mention that some companies come with good earnings, others not, and then we'll get to a few of them in the moment when we get to the stocks. I just want to remove those lines that don't confuse us. Okay, so that's as far as the US indices and China. Now, European indices continued being strong since last week. We had another green week. This is the UK index. And DAX, same thing. DAX is climbing, as we said last week. DAX is climbing to the all-time highs to retest it. And the French index, I think, also tried to break last week's highs, which is all-time highs. We closed at the highs on the French index, very strong. Nifty 50 is was having a negative week. So you could see here from this level, we went lower. So mixed picture. US indices clearly don't have any strength to go higher. European indices, on the other hand, are feeling strong. So let's see how this week will continue. And China, even though last week they reported a strong GDP, I always say, Chinese regime, I don't know the inside of it, but they can post any numbers. I'm convinced they can publish any numbers they want. So the GDP numbers that they posted could be real, could be not. We don't really know. But nevertheless, this past week, Chinese index sold. Okay, let's move to individual stocks. And we'll start from the stocks that reported last week. Netflix was a very interesting story. I was watching the stock after the announcement on the 19th. It reported after the close of the market. Stock went down 10% immediately. The first 5 minutes, it was interesting. We just fell, I think, from 330 to all the way to 292. I remember that visually. And then in the same 5-minute candle, it just came right back at the flat level. And then next day, the stock gapped down, and we tried to close that gap. We actually succeeded on Thursday to close the gap, and we closed at 327.99. So Netflix, very closely watched by investors. As you know, or you might not, they're changing the whole structure with the new membership. And another thing, after 25 years, they actually closing their the disk shipping system. That was the original business model where you can subscribe and get. I remember in New York having that service that you just order DVD, you watch it, then you send it back, order another one, and there were different programs. You could have 2 or 3 at the same time. And I think the cheapest one, that was back in 90s. The cheapest one was just you have one at the time. So you just drop it. It was coming with the envelope that you can just drop the mailbox, and then you receive the next movie. So no more program. They're cutting that program. So it's all streaming. No more physical discs. So Netflix, gap down and recovery. AT&T didn't do such a great dance here. As you could see, the stock opened lower and went gapped and continued lower. Tesla, same thing. Not so great results, and the stock just gapped and then it gapped again. So market reacted to it, and we came kind of retesting this previous support that we had here back in March 13 at 163.75. We closed the week a little bit higher. So this upcoming week, a few serious companies are reporting, and we have a Coca-Cola and the First Republic Bank on Monday. Tuesday, Alphabet, which is Google, is reporting. Just bring it up. Google is reporting on Tuesday together with GE, General Electric, and General Motors. So these two stocks are very interesting. GE has been very, very strong. As you could see here, I mentioned this stock a few times to you in our meetings. So they are reporting on Tuesday. The stock is super strong. And on the opposite direction, the GM, General Motors, the stock has been weak, also reporting on Tuesday. And a few other companies. You can just Google the earnings. I'm not going to give you the full list here, but there's McDonald's, UPS, Verizon, Visa, and others are reporting. Now, Wednesday, we have Boeing and Meta Platforms, which Facebook are reporting. And if you remember, we mentioned last week, Boeing stock, that they really holding the deliveries due to lack of parts in production. Some airlines are waiting for those MAX planes, and they're still waiting there. So Boeing is reporting, and it's happening on Wednesday. So as you could see, remember I mentioned to you, Boeing stock gap down, and then it tried to recover. So the gap was not covered. Let's see how the earnings will affect the stock. And here comes the Facebook. Facebook has been strong. Just to zoom out, as you could see, by the tremendous fall in Facebook, going similar to Tesla in a way, but much better recovery here. So we went to 87.97 back in October of last year, and we closed at 212.65 on Friday. In a way, first red week after 5 weeks of advance. So they are also reporting on Wednesday. Let's see what reports are and what the reaction of the stock. We have Amazon and Intel reporting on Thursday. Amazon is kind of bouncing. It's interesting. Take a look. Also here, we hit the 200 moving average and sold. And with the gap, we are hitting the 200 moving average again. And the stock is reporting on Thursday. And Intel, as you could see, Intel has been selling after a nice move to the upside. Just to remind you, Intel announced a while ago that they are building a big plant in Germany, and the German government is, I don't know, either financing it or helping out with a few $1 billion or euros there. And it was doing great for a while, and then the sell-off came. And I think it has to do with U.S. is really, in a way, in conflict with China, and they're working now on limiting the export of semiconductors to China. There's certain wars are going on around there. So the Intel is the one suffering. Another one is NVIDIA also. It's worth watching that stock. So Intel is back into a sell-off. We are close to 200 moving average, and the company is reporting on Thursday as well. And then Friday, we have Chevron and ExxonMobil, which should be selling due to the oil move. And they're not really selling, so they're holding pretty strong. That's the Chevron. And then Exxon. Take a look. I just see. Crude oil really sold since the 16th of April, and the stocks didn't really sell that much, a little bit. So let's see what the earnings are, especially the Exxon. Exxon is really, after this strong move to the upside, the accumulation is continuing here. So let's see how the earnings are. So that's it as far as stocks and the earnings. Again, you can always Google earnings and see if any stocks that you're interested or you're following are reporting. Some reporting before the market opened, some reporting after the market closed. So it's also important to pay attention to. Okay, let's switch to commodities. And we spoke about oils. I'm not going to go deep into it. Oil is down with China and, of course, the fear of recession and so on. Just to remind you, this gap happened when OPEC Plus announced that they're cutting the production, and there was accumulation. There was a nice try going higher. We went, I think, as high as 83 and a half, and then we came right back, breaking that support. And it could be that we're coming to close that gap. We're not that far away from it. So that's crude oil. Natural gas. If you remember last week, I mentioned that it could be the natural gas finally makes a move. It tried to move higher. Then once there was a sell-off, and then we are sitting at these levels here. Another kind of a big accumulation here. Let's see what happens next in natural gas. Gold had a sell-off towards the end of the week. We tried last week, if you remember, to make highs. We failed, and then it was a move down, consolidation, and Friday sell-off. We went below that level that we marked at 1988. We closed below. Let's see if we continue. Again, important to watch the 10-year yields. They keep strong. They keep about 3.5. I think at 357 we closed. I'm not sure. Don't have the chart in front of me now. But that's one of the reasons why gold sold on Friday as the yields went higher. Platinum, super strong. It just ignores the situation with gold. Take a look. They just decided to move it higher. But what's important here, that we are on the way to possibly facing the resistance around here. This level we hit, this is the weekly chart. So the week of February 27th, we hit 1154.7. We are about $14, $15 away from that level. It could be a resistance, or we could just go straight through it and continue. The move is very strong, very steep, and sometimes investors look or traders look at these moves for possible reversal, as the vertical things tend to reverse and have a nice move. So let's watch platinum this upcoming week. Sugar and cocoa, I want to bring to your attention. Sugar, you remember we mentioned sugar that we hit the level of 2016, I believe. Yes, 2016 October. We just broke through it in, this month. And this is the level 2408. As you could see here, we were fighting that level a little bit. We went higher, went below, and then Thursday was a very strong move to the upside. I think there was a change of contract as well. And then Friday, a little bit of a reversal. So let's see if sugar, if there will be some profit taking, or we will continue higher. And cocoa, very strong as well. Daily chart, clear uptrend with the higher highs and higher lows. Accumulation here followed by the move higher. As you can see here, we just broke through this levels of resistance approximate that we had back into 2018 and 2020. So it could be that we might continue higher here. At least we see kind of a support that used to be resistance at this levels, 28.34. Let's see. That's approximate level that just dropped. So let's see if we continue higher from here. And that's on cocoa. Let's go into Forex. As I mentioned, on that screenshot that I made, that a lot of talks about dollar. It's kind of losing its demand in a way. And also, a lot of analysts are writing that the world central banks, the holding in US dollar is really shrinking and shrinking pretty fast in a way. Don't remember the numbers, so I will not misinform you with that. But there's a threat to US dollar clearly, and as you could see here, this was the move that peaked in September of last year. We went as high as 114.72. Since then, 1, 2, 3, 4 months straight to the downside, 1 month green, and the past 2 months so far, we're going lower. And the dollar is kind of having a hard time moving higher from here. Take a look. We're clearly, this is a weekly chart. So on the weekly, we came all the way down to the previous support over here. Then we moved higher. We failed. Just want to analyze this for you so you understand the way things are. We failed to break through the previous resistance, and then we went lower, and we actually broke the previous low. So technically, even on the weekly chart, it looks like we're in a downtrend, because what is the definition of the downtrend? When we switch from higher highs, higher lows to the lower lows, lower highs, which was right here. This was the lower high from the previous one, and the lower low, which kind of would bounce from that. So let's see if we are holding these levels. It's going to be very important. And of course, we're facing in a little bit over a week, maybe a week and a half, the beginning of May, there's a next Fed's decision, which has a high probability of another 0.25% increase, which potentially could add volume to dollar. But again, under this downside pressure on the dollar, we could see anything. So the currency pairs, it looks like euro and pound are strong, but Swiss are just, important when you look at different pairs, important to feel the relative strength. So I just going through a few currencies, I realized gradually that euro and pounds are strong, but when I measure them against the Swiss franc, they're weaker than the Swiss franc. Then it looks like Swiss franc is the strongest currency right now. Let's just take a look really quick. So remember, Aussie and New Zealand dollar are weak, even though US dollar is weak as well. But because of the pressure on the Chinese index, I think they are having a strong downside pressure. So here's euro, right? Euro, as we mentioned last week, this 110 level, 110.32, the previous resistance is still in play. We didn't manage to go higher there, right? So strong, but still fighting their resistance. Pound back to fighting this level, 1.2435. We had a double top here, another attempt that failed, another that failed. We're back to square one, but we are really holding strongly to this resistance, which makes pound very strong here. Now, between both of them, euro and pound, on the weekly, we have pound winning. And then let's take this pairs and compare it against the Swiss franc. If you're ready for that, this is euro Swiss. Take a look. It's been really weak against the Swiss franc, and pound as well. Here it is. Pound, even though it's strong against the US dollar, it's weak against the Swiss franc. So let's just take directly USD Swiss franc, and we should be seeing the weakness. And take a look. Here you go. That's your weakness right here. And we tried to move high here after a lot of actions. Very choppy trading in the USD Swiss. Very volatile here, as you can see. And then in the past few weeks, we're just sliding lower, and that makes Swiss franc very attractive for some reason. And USD JPY is actually not selling that strongly. It's showing actually the strength. So the yen is having a hard time becoming stronger. And like as I said, this week we might see surprise, even though they don't expect any changes, but we might see that long-awaited change in interest rate from Japan. So we established that Swiss franc is strong, euro and pound is strong as well. Dollar is kind of flat, having a lot of pressure to the downside. And another one is USD CAD. It's been up this past week due to the weakness in crude oil. And for new people, important to mention that Canadian dollar is very sensitive to the price of oil, as Canada is one of the exporters of oil. So take a look. Even though dollar was weak against the currencies, as Swiss franc, euro, and pound, but it's been strong against the Canadian dollar, and it's just erased the previous losses by going and negating the previous candle right here. So we'll be watching what's happening next. And our pair that I've been following for a while, if you remember, we mentioned this level, 162.25. It's been interesting watching it. The pair has been strong. If you remember this, we mentioned this level a few times. It went lower, but then the moment it went higher here, there was another retest actually on Thursday, and we failed to break the low. It was a nice entry here for the traders, and then Friday was a super strong move to the upside. So I'm still following that pair. Take a look. We are at this level that we mentioned a while ago. The level here is 164.35. It's about 200 pips from the previous level that we spoke. And if we do break this level and start establishing support, we might see continuation to the upside. So it's kind of a next step in the move higher. And that's it with Forex. And let's wrap it up with Bitcoin. As you know, we mentioned the 30,000. We had a hard time, a lot of fights around there. And then the past week, we just went straight down from there. Three straight days to the downside. We hit almost 27,000. So it looks like that 30 it's unbreakable for now. Again, a lot of fundamentals, a lot of speculations. I really don't have any solid information on the fundamental side to support or the opposite of the Bitcoin. Nevertheless, we sold, and if you take a look at the weekly chart, after a nice move to the upside, this is the first week that we are down, and we broke to the previous week's low. So this could mean that we might continue lower, maybe to retest the 200 moving average again, or go to 25,000 as well. That's it pretty much. I want to thank you all for attending the webinar. I want to wish everyone a great weekend. To summarize things, we are getting closer to Fed's decision, first week of May. We have earnings season. We're in the middle of big companies reporting this week, the companies that we mentioned. So get some energy, prepare yourself for another week of trading. It's going to be exciting. And I want to wish everyone lots of success, all the best, and we should be back next week. All the best. Take care.